All right, so what we want to do today is we want to kind of dig into the question of what is a chart, how to read a chart, and why should we consider really even looking at charts. I have a good friend who asked me about kind of how I look at certain things, and he said, how do you read these charts? Can you kind of walk me through this? And so it's going to be good content to kind of break this up and show you kind of step by step on what to do. And so the first thing that we're going to do is we're going to open up a website known as TradingView. TradingView is a free service that you can go and you can really use their charting softwares that they have on there. When you go to tradingview.com, you can simply click launch chart. But what you got to know is there's charting aspects that we're going to talk about today, but you can talk about different trading ideas and stuff like that, view through different markets, what's going on there. They've got all kinds of crazy stuff, and they've got advanced stuff that you could pay, $20-30 a month, a couple $100 a year, whatever it is, if you need those services. But really what I want to talk about is the free service. You can create a free account with TradingView by just simply clicking free account, and you can see here they've got some pricing. But basically we need to look at the charts, and we want worldwide data, and we want some tools to be able to make it easier on ourselves. So all I'm going to do is I'm going to hit chart, and the chart is going to bring it up, and it's going to look like this. Now, a lot of people have seen something similar to this, right? You see a lot of the ups and the downs. You see the reds and the greens, and maybe this triggers an idea, right? You think of stock traders, you think of day traders, and that kind of stuff. Well, the interesting thing here is that this data is actually telling us whether we should be getting in or getting out or staying out, right? And so I'm going to teach you a little bit about some of the pros and cons. And first, let me take a second and log in so it's a little bit clearer, since all my settings are going to be saved. But here's what's going to look like when I'm done is basically once you get to the chart, you set up your preferences, right? And really your preferences, when you have a free account, this thing's going to pop up down here quite a bit. But you simply click in the white area. Now, I prefer to come down to color theme because I think this white is very blinding, and I use a dark theme. I think it also helps to bring the candles out a little bit as well. I happen to have a mouse that has a little roller thing on it right there. And when I roll it up, it zooms in, right? And when I roll it out, it zooms out. Very clear, right? And what this is doing is this is showing me market data. Now, what am I looking at is the biggest question. And if you look up here, it says AAPL, right? That would stand for Apple, the stock Apple. So what I do is I'm going to click on it, and I'm going to type in BTC, which would be Bitcoin, USD, meaning that is the pair that I'm trading Bitcoin against. So you see right here, here's Bitcoin and USD. Now this specifically is on the Bitstamp exchange, right? Just simply one of the exchanges that are out there. Here's a Coinbase exchange right here. And obviously there's a ton of others, as you see. Now, if you wanted to trade Bitcoin against anything else, right? You'll be shocked over here. You can go Ethereum. I'm sorry, you got to do Ethereum first. You could trade Ethereum against Bitcoin, for example, and that's going to show you a chart where it's the Ethereum prices compared to the Bitcoin prices instead of the Bitcoin prices compared to the US dollar prices, right? So for the conversations today, since we're talking about crypto, let's talk really simple Bitcoin versus USD. We're going to pull up the chart here. Now, what chart am I looking at is always the question, right? And the chart that I'm looking at is a daily chart. You see this D up here? This D means it's the time frame in which I'm looking. Now, how much of this is one day? And the answer is each one of these candles, which I'll tell you about what that is in a second. Each one of these green lines or red lines represents one of whatever time frame you're in. So if I go over here to a 1 hour chart, each rectangular shape here, as you see here, this big green line here, this box with these two little things on the end of it, that is 1 hour. And then the next little green box is obviously, guess what? A whole other hour. And how do we know where we're at in that hour? If you come over here, you can actually see there's 3 minutes and 52 and 49 and 48 seconds left in this hour, right? And so really what we want to do is we want to choose our time frame, and these time frames really allow us to better understand a lot of things, but the biggest thing that it's really helping us better understand is kind of what how our strategy is going to fit into the decisions that we're going to make. So we're going to talk about a lot of things, but at a bare minimum, the first thing you're going to do, open a TradingView account for free. You could go in, pull up a chart. You could pull up the asset you like the best, right? Bitcoin, for example, and you could save it over here on your watch list by simply clicking this plus and going looking for it. So now I can sit here and I can click through the different things that I have up here. And again, if you scroll down here to crypto, you can see there's Bitcoin USD, Bitcoin USDT, which is Tether. It's a stable coin, which is a cryptocurrency that is attached to and pegged to the value of the dollar. So basically, it's always worth $1, but it's digital money instead of your paper money. And now I have it saved. And we'll talk about how to set up some other things as well before I log in. But really, this is the overview that you need to know first, okay? The next thing you need to understand from here is you've got tools over here on the left, right? You've got, looks like a little line, a little pitchfork, a paintbrush, a T, right? All that kind of stuff just are different tools to do different things. At the top, I already explained what the symbol is. This is your time frame, whether you're going to do a day or a week or a month. This really depends on how you're going to be investing, right? If you want to be a day trader, you need to trade intraday, meaning inside the day, meaning that I really need to make all my decisions when it's in this one green line. And I can't really do that from a daily point of view. I have to go to a smaller time frame to be able to trade that. So if I wanted to trade every minute, how would I know what to do? I need to go to these smaller time frames and learn how to make those decisions, right? And we'll talk about that in a minute. The next thing you see here is where it says candles, right? This symbol right here mimics what you see on the chart, right? Let me just go back to a daily to keep it really simple here. Candles are what these are called. These happen to be known as Japanese candlesticks. This concept dates back hundreds and hundreds, maybe even thousands of years. Somebody can Google that and let me know. Just put it in the comments so I can check it out later because I've forgotten about how long ago it is. But there's all kinds of different candles that we can look at, right? A lot of you, if you get in this long enough in this space, you're going to hear about Heikin-Ashi candles, which it's just a different way to view the exact same data, but by viewing it a different way, maybe it tells you a little bit different story, right? I prefer to use the Japanese candlesticks because they paint a picture for me that makes a lot of sense. And so what I'm going to do is I'm going to go ahead and zoom in down here. And the way that I can do this, if I want to be able to kind of move things around, as you saw, I can hold control, or what I can do is I could take this where the numbers are over here on the right and I could click it and I could squeeze it down and that contracts it, and I could squeeze it up and that obviously, does the opposite. Same thing on the bottom down here where you see the dates. I can make the time frame shorter or longer just simply by moving it left and right. But really how I use it is I kind of double click it and then it allows me to drag around really wherever I want. The other thing that I can do is over here on the right, you see this plus symbol? If you click this, you can then drag and say, I only want to see this section right here. And now, boom, it's zoomed in exactly where I want it. Okay, so now you understand how to adjust the chart a little bit. The next step is understanding, coming back to this candle situation. What is a candle? And a candle is all of the price action or the activity in the market for that time frame, specifically a day. And what the candle is showing you is that the rectangle is known as the body, right? This whole thing right here is known as the body. And really when we're talking about it, I'm going to go ahead and start using these tools. You'll kind of figure it out as I go through it. But as you see here, right at the top of this candle, you'll see that the body ends there, right? And then at the same time, you're going to see that at the bottom, you have the body ending here, right? And what that means is that is the start and the stop of that time frame. This is a daily candle, so this is where the day started and exactly where the day ended, the exact price when the day ended. So this is a red candle. We happen to have it set up to be red, meaning that the way the standard charts are, green means that it went up, the price went up during that time frame. Red means it came down. Pretty simple, right? Green means make money, red means you're dead, or red means you're losing money, you're bleeding out. And so what we're looking at right here is you see at the top of this, it started, the price was 56,830 at this time. And then we had this huge sell-off. All these people sold off, and it went up and down and up and down and up and down all day long until the last second, it finally closed at 49,000. So on this day right here, which is a pretty big bad day, you lost thousands of dollars if you stayed in this all day long. So if that's the case, what do these guys mean, right? What do these little little lines mean? They're called wicks. And the thing you got to know about a wick is the wick is telling you what happened in the past. So remember, we started at the top of the candle right here. This is where the day started. And what might have happened is it went up all the way to this price, 57,900. So it went up in price, meaning that it was green at one point. But what happened is there was so much pressure at that point from people who were like, no, I want to sell. I think the market's going down, that it started to sell off. And eventually, after going up and down and up and down, it came all the way down to the bottom of this wick that you see down here, right? It's hard to get over it, but this level right here would be the bottom, 48.5. But that was a cheap enough price that some of the buyers in the market were like, wait a minute, this is too low. I need to start buying this. And they bought it up. And again, it went up and down and up and down to the last second of the day when it closed at this 49,324. And you can see the number I'm talking about on the far right simply by looking at where the prices are. But what happens is the time frame opens, right? And then you don't know what is it going to go up or is it going to go down. But eventually, over time, it will move up and down, and then it will show you what's happening right now as well as what happened in the past. And there's a reason these wicks are going to be important. We'll talk about it later when we start talking about trading and what's really happening in this kind of marketplace. But the gist of it is when you see, like, let's look at this next candle, this green candle right here. Because what ends up happening right here is, and let me kind of make it a little bit bigger. This candle right here, what happened is, remember, the day ended here. So the next day immediately starts where? Right here at the bottom. And we don't know if it's going to go up or down yet necessarily, but it decided, oh, it's going to keep selling off maybe. You see how that green line goes all the way down? That means at one point the price came down here, but that was the lowest price of the day before it got bought back up. And it got bought up at some point all the way up to this green, top of this green wick right here. And at some point, people said, no, this is too much. I'm going to go ahead and I'm going to kind of come back and draw back a little bit. And the day ended right here. So this day was a whole bunch of activity. A lot of people decided to sell. On this one, it seems like there was a lot of activity, but nobody could really decide what was happening with the price. And nobody really wanted to commit to say, yeah, we're going to sell it and make more money in the future. Or they say, we're going to buy it because it's going to go up. Basically, no one's making a decision. And when you see really big wicks like this, what you're seeing is indecision. It's investors getting in, the price goes against them. And so they say, oh, nope, I'm going to get out. I think it's going to go down now. And then the price goes up. And they say, oh, maybe we're going higher, so maybe I'll buy it. And so it's a lot of decisions, indecision. You got buyers and sellers battling back and forth on the price. And the more they battle, the more that candle stays very, very, very small. So that's a little bit of an explanation of kind of what's happening, right? And this, again, will make a little bit more sense as we get farther into this dialogue. But first things first, now you know what we're trading, what we're looking at rather, right? Not necessarily taking action on, but what we're analyzing, the time frame in which we are analyzing it. The type of candle pretty much stays the same all the time, right? Until you get pretty farther down the road, you really don't consider too many other things. Like I said, you might want to look into some of these things. Everybody knows this. This is a line chart. If you've turned on CNBC or Fox Business or anybody who talks about the financial markets, you got line charts like this. Very, very common stuff, right? The problem is I can't make a decision on what's happening when it's just kind of a bunch of lines. I don't really see in the short term what's happening. Now, what can I do? I can zoom out. And this is actually pretty helpful in the long run, right? Because, oh, look, there's a very clear, line here that allows me to see what is the direction of the marketplace, right? It's going upwards. So the nice thing about the markets is there's a thing called trend trading. It's a style of trading that I'll teach you, that it's all about the trend. And there's a very famous saying in trading that says the trend is your friend, and meaning that if this market's going up right now, it will continue to go up until it meets a level of resistance to make it go another direction, right? And so a lot of times when things are going up, they're going to continue to go up until they reach that level when they say, they're not going to go up anymore. So as you see, this happened to go all the way up to this point right here. And then it was like, hang on a second. This is too high for whatever reason, right? It's too high. We're going to sell this thing off. And then obviously the price comes back down. And so one of the biggest rules you got to know about investing and trading is, guess what? Things don't go up all the time and things don't go down all the time. So a lot of times when you're investing, especially in cryptocurrency, there's all kinds of coins that are really hyped on social media. Certain CEOs of large automobile manufacturing companies will tweet about something and really help the price change directions or push the price even higher. That doesn't necessarily mean it's a good thing to invest in. but it tells you that some things are going to be very unstable, right? A lot of people have heard of somebody who got in low, they rode it up really high, they made all this money, but then guess what? It sold off, and now all of a sudden they didn't make near as much money as they thought, because now they're back down to where they started.